Good morning, everybody. Excuse me. Welcome to the Market Institution Mastering the Charts Review and Recap. Okay. Um, we'll get started here in about 9 minutes. Just wanted to do a couple follow-up on some trades we took this morning. Actually, I have to go out to the larger time frame to do that. Breakout on the S&P, great move up. Russell quickly approaching a supply zone in a sell territory, 1806 half. 5-year, depending on what the yield does, we're looking at a breakout on that one. Not much room for profit potential. We want to pay close attention to where those opposing zones are. Dow climbing up. We're now looking for 34,152. NQ 15,403 area for a short. Looking for a pullback. So everything's playing out just as we put out there this morning. Very nice. So I'll put up our welcome screen and we will get started in about 7 minutes, okay? Our start time will be in just a few moments. Still waiting for that NQ just to get up just a little bit higher. All right. Good morning, everybody. This is the Market Institution, marketinstitution.com. You are in the Mastering the Charts recap and review, or review and recap. Okay. So this is Mastering the Charts, basically 101 or one level recap and review. Information contained in this presentation should not be construed as a recommendation or an offer to buy or sell any security or financial instrument. Additionally, information contained in this presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees of the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading of any investment, any trading strategy. We are using real-time market data and will be executing trades in a simulated account during our presentations. No offer on our part respecting the sale or purchase of any security is intended or implied. Nothing contained in here should be construed as a recommendation to take a position in the market. The intent of this information is for instructional and educational purposes only. Any fair use of third-party trademarks or logos does not imply an affiliation or a sponsorship. All trading involves high risk. Past performance is not indicative of future results. We make no promises, guarantees, warranties, suggesting that any information shared will result in a profit and not in a loss. You agree to not hold us legally or financially responsible for any reason. All right, again, welcome. The purpose of this class is to recap the Mastering the Charts Part 1. Okay? Being built right now and outlined and assembled is Mastering the Charts Part 2 and Part 3. Mastering the Charts Part 1 is our kind of our core strategy, our basics of understanding the charting. Okay? Part 2 is where we take a deeper dive and go into a lot of the little subtleties that traders start looking for once they have Part 1 done. And Part 3 is the active income side of things, where we actually go out and do the live trading. We do a morning prep. We understand the morning prep and all the components around it. So mastering all three of them together kind of take you on a journey to get your foundation, take you up a few notches to be aware of the other things that are outside the price chart, as well as on the price chart. And then, of course, the application part and how do we execute trades while we're doing it. Okay, so 3-part series coming up. Right now, we just have content for Part 1, and we're getting many of our students put together to understand how to read and master the charts. Okay. In this section, we are here to answer questions. Please use the chat. We will be doing a little different format starting next week where students will have the ability to talk and chat with us and so on, and make it a little more interactive. Towards the end of this little section, we will be doing a Mastering the Charts review with stocks, futures, or Forex. And I do want to reiterate on this level here. You know, I primarily trade futures, but this is not just dedicated to futures. The Market Institution and what the methodology and approach that I am using to share with students is to help them master the charts, not a single asset or a single product, okay? Mastering the charts is to understand and see the picture on the price chart where we have leftover unfilled orders. Using those structures and patterns to help us take a more risk management approach to the market and anticipating where the market may change directions in the future. It boils down to is this becomes a forward-looking technique by using the information on the left-hand side of the chart and then moving over to the right-hand side. So what we want to do here is collect 100 picture-perfect past trade setups. One of the key things to do is understand what that picture looked like when we had unfilled orders on the left, or what that picture looked like for a perfect trade on the left-hand side of the chart. History will show us over and over and over again what a perfect trade setup looked like, okay? It's our job to give you the basic structure, some step-by-step process to get into the trade, manage that risk, and so on. So just as kind of a heads up over here, I noticed the chat's going on. If you can, everybody can test out the chat to see if it's working. I just want to verify a couple of things. And please feel free to ask questions along the way. This is just not a presentation. I want it to be more interactive with us. Often when traders are starting to, hello Jorge. Often when traders are putting pieces of information together, they start to assemble their 100 picture perfect past trade setups. And then a question comes up. And once that question comes up, you know, if they don't have an answer to it, they start drifting off in other directions. The Mastering the Charts review and recap section here is to make sure that you have access to me or one of our other instructors to ask these questions and to go through the process and be interactive, okay? So as you're collecting 100 picture perfect past trade setups, okay, and I'll just demonstrate that for a moment here, okay? So I'm just gonna randomly go out and let's flip over to a stock, okay? Looks like we got, I'm just gonna grab one right off the list, okay? Oh, beautiful. Now, what happens most often when people start to collect their 100 picture perfect past trade setups is they're looking too close to the right side of the chart to find a past picture perfect trade setup. So what needs to be done is you need to go over to the left-hand side of the chart and look for ones that have already been created, okay? Now, these are picture perfect past trade setups, okay? Whereas we use that picture on the price chart to help us see what we're looking for, okay? Now, one of the first steps, as I will do a little bit later as well, is to identify where the buyers kept coming in and supporting price, okay? So if they're buyers, I'll mark that with a green. And what this simply means, okay, is that as price dropped back down, there's still a stack of buy orders here. Price ran up again, dropped back down, there were still more buyers. Price came up, back down again to this area, still more buyers. Now to qualify as support area, price must be hit at least 3 times. So the criteria is met. Now, as we see where the buyers or more buy tickets and sell tickets stepped in, then we can map out the area above as our potential sell territory. In this area, price ran up and then was met by more sell tickets, and more sell tickets, and more sell tickets. So as price keeps going lower, they were looking for the buyers. As price was going higher, they're looking for sellers, okay? Now, as we start putting more of this together, you'll see how nice and easy this comes to play to see a picture perfect past trade setup. Step 1, find your support. Step 2, identify your sell territory. Step 3, identify the structure within that sell territory. This is hugely important because it trains the eyes to help see and understand where you will be looking for your leg-based group of candles, where you would find your zone, okay? Now, often these structures in the cell territory, they can look like a head and shoulders, pennants, flags, wedges, cup and handles, rounding tops, rounding bottoms. They can really compare to some of the other chart patterns you have seen. And that's okay, because more participants seeing the same thing, the better off we're going to be. Now, the structure inside the cell territory, where we see our pivots, when we identify that we make a lower high, okay, often we find our leg base group of candles closer to the breakout point in the lower 2/3 of this whole range. So now that we have an area where to look for the leg base group of candles, and for this I'm going to help train your eyes and put a little blue dot on what we call a base candle. Okay? Every candle that has a blue dot on it is just simply a candle where the body is less than 50% of the range. Our basic structures and shapes can be done on larger time frames, depending on how well your eyes are trained. The leg base group of candles can be on any time frame, and the time frames must be adjusted to locate it, even if it's adjusting down or up at 1 minute at a time, okay, to get that picture and the exact shape that we want to find as far as the leg base. So I'm going to continue to do that and drop down the time frame until I get the right picture. Okay, still no leg base. I'll describe it once I find it. 55, 54, 53. There we go. So there is no magic in a 53-minute chart, okay? Now the 53-minute chart just simply was the time frame where I could see I have a leg candle, body greater than 50% of the range. If it's a supply zone, the leg must be green. Base candle to follow, in between a leg in and leg out, so I can have only base candles. As far as a little bit more of an odds enhancer here, I can have 1 to 5 base candles between the leg in and leg out. I can have 1 to 4 leg out candles. That's some of the parameters around this. Now, my distal line will go at the highest point between the leg in, base, and leg out. Proximal line will go to the lowest, or go to the first base candle, body, after the leg out. So as we adjusted our time frame down and found the leg base group of candles, we were then able to make the association that this group of candles was present, price change direction. So later on in this presentation, we'll be doing a 5-step process where I walk you through each part of this. Because we made that lower high than the prior high, the structure helped us identify the place and the area in where to take and look for the leg base group of candles. Then it was time for us to turn the time frame down or up in order to get that picture exactly right. Okay, now that you have a picture perfect past trade setup, you can take the documentation from this and put it into your file. Now with TradeStation and many other platforms, you can either snip it, snag it, however you like, or with TradeStation you can also save. Now I gotta find it here, but you can save as a picture, okay? And then you can put it into a file. The action of collecting hundreds of picture-perfect past trade setups trains your eyes and accelerates them to find these pictures on the price chart that we can use at hindsight to train the eyes. Now, coming over to the right side of the chart. Just step 1, let's find an area where we have 3 touches of resistance. or more. Minimum is 3 touches, okay? So as we take the information from the left-hand side of the chart, resistance, since prices broke above it, the area below becomes my buy territory. All zones must be located in a buy territory to go long or in a sell territory to go short, okay? Zones located outside the sell territory or outside the buy territory are often violated and run through, okay? Oh, thank you, JP. File, save as picture, and you have your picture saved, save as, and you can put it right into a file. Thank you, JP, that was excellent. All right, so as we're starting to build this out, and it doesn't matter what time frame you see it, some of you will see these patterns and shapes a little easier than others. Okay, for me, I had to be very descriptive. Step one, find my resistance. The resistance just simply says I have more sell tickets coming into play in these areas than I had buy tickets, okay? When the sell tickets were all filled, price went through that area. So the area below becomes where my buyers, or where we had more buy tickets than sell tickets coming into the market. A fresh accumulation of orders is what this is, okay? And as you recognize that this is a fresh accumulation of orders, you start taking pictures of it. The shape, the structure, and we put this into a step-by-step process, whereas we gather this information to help us look for where would we anticipate looking for our leg-base group of candles. Very often when you're making a higher low, be in the upper 2/3, lower high, lower 2/3. Lower low, bottom 2/3, higher high, upper 2/3. So when we're making a higher low, as we have described right here, that's going to have us focus on this area to find the leg base. Now, I do want to point out, and you have to acknowledge yourself as well, that you have missed the breakout trade, okay? The breakout trade occurs once you have 3 touches or more of the resistance area, okay? The other clue is to have a leg base group of candles before price breaks out, because that, if you're kind of watching how a fresh accumulation of orders gets assembled, okay, all those patterns and shapes can be right there in the price chart, okay? And I'm also noticing a leg base right up here, which would be my opposing zone, okay? So we're on a 53 minute. I'm going to look right in this area here for the leg base. I'll just keep going down in time frame. 52, 51, okay, 50, okay, getting close, 49, there we almost, 48, 7, there we go. Now, the leg base group of candles must be exact. It helps us gauge our risk on a trade, okay? I'm going to open this up. In a demand zone, the leg in must be red, always, okay? The leg out must be green, always, okay? In between a leg in and leg out, a base candle only. The first base candle after the leg out is where we place our proximal line. and our distal line will go to the lowest wick of the leg in, base, leg out. Now, as we gathered this information, okay, we are now using this information in order to visualize the right side of the chart. I'm turning this into a forward-looking technique. Now, this is the same information we use for our supply zone on a picture-perfect past trade setup. Except we had support and a sell territory. In this case, we have resistance and a buy territory. So we already missed the breakout trade. And we're okay with that, okay? And what we're looking for now is our supply and demand trade. Whereas we're looking for an opportunity to go long if and when price returns back down to the origin of the strong move up. This also alerts us ahead of time what our risk on that trade will potentially be. As we use a forward-looking technique, we also have some other criteria in how to make sure that this is a fresh and now active zone. A fresh zone is when price moves away and price is not returned to that area since it's created. A pending zone would be a zone that has the group of candles, but price has not moved away to make it an active zone. A fresh, active zone is when we have the leg-base group of candles and price has moved above resistance and greater than 2 to 1 the size of the zone. Now this zone down here becomes a fresh, active zone. Now, I can teach you the right side of the chart all day long, okay? But what's important is that you understand what a picture-perfect past trade setup looks like in order for you to participate in them and see what they look like on the price chart and to document those things over and over and over again. It's not difficult, it just takes your time. Takes time to do it, okay? And once you start doing some of the basics, qualified resistance or support, qualified buy territories and sell territories, then you can easily go back and find where these levels are at, okay? So collecting your 100 picture-perfect past trade setups is extremely important, okay? So, did I miss a slide? No, I got them. Some of the basics that we are looking at in assessing market conditions in the pre-market. Okay, so I'm going to do a little recap of the live trading room for the past 2 days. Okay. I have just recently and yesterday outlined a whole new pre-market routine. Once that's ready, I'll alert everybody to know so that you can come and participate in that. But these are some of the basics. Gathering information about the market and the environment, trading environment, is really important. We use economic reports and events, news, correlations, inside day, outside day, trends, high volume zones, low volume, high volume versus low volume price moves for our pockets of points, high volume and low volume zones, and zones that are created during the regular trading hours. We weight them differently than the zones that are created outside the regular session. Some internals to help us understand how the market is moving. Let's reference that really quick here. Notice that the markets have been moving up, okay? And as we have seen the markets continue to move up on the S&P and the NASDAQ, a good understanding of the trend being low. Markets ascending, trend descending. Once it gets below 60, we want to see where price is intersecting with a supply zone. The trend leads the market by about 15 to 20 minutes. okay? Now, why am I bringing this up? Well, the trend is low, below 60. The markets are ascending. Russell is approaching a prep screen zone. They're selling into this move up, okay? Banks and institutions. So we want to know where to take action based on the information shared with the trend low, time to go, trend high, time to buy. Trend is low, markets are ascending, so we are looking for these intersections, okay? NASDAQ is right in that level. I will be looking for the NASDAQ to set up this trade going short below 15,361 and quarter. I don't have to rush into it, 361 quarter. I just have to put my order out there. Once I'm triggered, I can come back in and place my stop, or I can do that all ahead of time as well. S&P, okay, I don't have a zone mapped out. It's up a little bit higher as far as my next prep screen zone, okay? So I'll have to do a little more research on S&P, but I don't have to place a trade on everything, okay? NASDAQ, the trade is open. We're looking for a breakdown back below that area, below 361 quarter. Dow is inside the zone, still looking to fill that unfilled inside day gap. But the Dow also, I'll be looking to take a trade short, basically due to the trend being so high, okay? Now for this one, I'll be a little more aggressive, and I'm going to drop down the time frame and look for where I can be that aggressive to get in. Now, right now, I'm going to wait. The reason I'm waiting is I don't have a fresh accumulation of orders. In order to have a fresh accumulation of orders in a supply zone, I would need to see where price met support 3 times. Then I could look for the breakout. I just chose to drop down to a small time frame chart to see if there was one setting up. As we view this, there's no support up here. Right now, there's no sell territory that is necessary for us to take a trade short. Even on a 1-minute chart, there's no support, there's no fresh accumulation of sell orders, okay? So the market is moving up, and we have indication that we should be looking for it to drop. We're at an extreme on the advancing issues over declining issues. We've had several buy programs come in today on the New York Stock Exchange, but those buys, okay, because notice when the tick is more upticks and downticks here. When the market's going up, but there's more sell tickets than buy tickets happening, who would be buying on the upside like this? See, the fact that we have buy programs over here, and we show that we have more downticks, down volume, than upticks and up volume, that implies somebody selling into this move. But who would be causing all the upticks? How about every novice out there that keeps trying to pick a high point? Okay? So what you're seeing is in the combination of what I'm putting in play here is that the markets keep moving higher, not because people are buying into it to go long, is that there's more traders covering short positions at every little high point, okay? So high volume zones versus low volume zones, internals, they all give us these feels around the market. Buy zones, sell zones, breakout trades, buy territories, sell territories. These are all gathering information to understand the trading environment and where to take action on a trade. Now, there was a lot of things that came out on Monday. Okay, and this is Monday, October 9th, market overview. Indexes are starting off as an inside day. Small overnight Globex range. Gaps fill a high percentage of the time on inside days. Each one of the index did fill the gap. Okay. The war between Israel and Hamas broke out as the Jewish holiday came to a close. Columbus Day in the U.S., where banks were closed along with the bond market. There was a lot of things that were going on yesterday that were making us feel a little more uncomfortable, especially with the expectation of oil prices moving up, conflict between Israel and Hamas, also Ukraine and Russia. Okay, world wars are breaking out. This is not fun. Okay, so with that information, we were a little bit more hesitant. We were inside days, waiting for the equity indexes a little bit later in the session. And as the pre-market routine gets more outlined and more ingrained into what you're looking at, all those little nuggets of information should trigger what you need to do, okay? For example, I'm going to come back out here and use one thing that's been very helpful the last couple of days is each one of these range areas that I have marked are the Globex session, okay? Globex session was small, results a longer running day, trending. Globex session small, nice trending environment. Globex session small, trending environment. So when we're putting that information together and we see, hey, you know, I'm tracking that Globex range and I want to compare that Globex range to the daily ATR, okay? So let me just, I'm going to outline this for some of you that are taking notes. Notes or making stickies. How's that? Globex range versus daily ATR. Small Globex range, okay. What would be some measurements around that? Okay, would be small would equal 0 to 40% of daily ATR. Well, what's the results of this? So far, we're documenting that when that Globex range like that, small, okay, let 0 to 40% of the daily ATR, longer running trend sessions come into play. That's good to know, okay? So when we have a, let's call it our mid, what's a better word? What guys help me out with the word? What can small? We have small and wide, so a small zone versus a wide zone. What could we use for that middle? Narrow? Okay, let's try narrow for right now. Well, narrow and small would kind of go together. How about average? Average range would equal 40 to 70% daily ATR. okay? Choppy environment, choppy conditions. Okay. A lot of back and forth. Wide equals 70 to 100, 70 to 100% of and strong reversals, okay? So as we kind of put these pieces together and we see the reliability of using that range, the Globex range, we want to document this information. And as you document it, you become more comfortable in using it. You may become more comfortable to assess when to stay in trades longer, okay? Even with news, economic, political things going on, the banks are still in control of what the market is doing. Now, using this information to stay with the trend, we can say, well, heck, I've already missed that day. Yes, you did. Okay, but where is it supposed to end? Okay, so when we use this information on the price chart, okay, and we see that, hey, we had a longer running trend up here, where did price run up to before it dropped back down? Okay, see, where do these longer running trends come into play? Here we can see price stalled a little bit. Well, we'd look right over to the left and see if we can associate that with a potential zone. Same thing over here. Oop. This area, we got a nice pullback. I'm just going to use a full line, then we're going to come over to the left-hand side of the chart, and we want to see if we can line that up as well. Okay, is it in a supply zone or a demand zone? Okay. Then we have our last little level, which we're nearing now. Okay. So by looking at this information now, where price is, okay, where's my supply at? Is there a supply, or is price going to continue to move higher? So I'm following that dotted line all the way over to the left-hand side of the chart. So in now accumulating the information on the left-hand side of the chart, I'm coming up and left and now starting to look for, where do we have that support area? It's time to find where we have our buy territory and where we have our sell territory. In this case, we're looking for our sell territory. This is where price is currently. As you're looking up, you're not seeing a whole lot of resistance at this point. Okay? So this whole area that we are looking at right here was a light volume and in one session dropped. As we draw this out, let's just get our zigzag lines up here. Price came in, found some buyers. and we had to move down. Okay, we made a lower high than the prior high using that structure, so now we're going to look for the leg base group of candles up into this range. Okay, it's going to be in the lower 2/3. Okay, so by making a lower high, we use that support and we go up to the top of the sell territory and we divide that into thirds. Now, it takes about 50 times of doing this, and then you got it, okay? You don't have to do all the steps that I'm sharing with you, okay? So very often, and a high percentage of the time, when we make a lower high than a prior high, the area that we're going to look for, our leg base group of candles, is going to be in the lower 2/3 of this range. And it just so happens that we have one right here in the lower 2/3. So now we can see where we have an opposing supply zone. Okay. Now going back over to the left-hand side of the chart, we have a qualified sell territory, supply zone, and we're going to bring up, and we get the reality of where the next sell territory and sell zone is. By doing our research and looking over to the left-hand side of the chart, okay, either price is going to come up to the sell territory, sell zone, and then turn and go down, or along the way, if we're going to go back down, we must build a fresh accumulation of sell orders. Okay? In order to build a fresh accumulation of sell orders, I need to find where we have 3 touches of support. Don't have anything here. Okay, so it's going to take and this is very key for people that are trying to pick a top and short the market on these small time frames. There has been no fresh accumulation of sell orders yet. Okay? If you keep trying to pick the top, you're going to be those guys that keep running the market up. The conditions that I just explained, by using pre-market checklist, and what we check each morning is, and throughout the day, is who's making this market go higher at this moment? Well, we're seeing a lot of buy upticks over downticks. But the trend is also showing that there's more sell orders and down volume and down ticks than upticks. A little different measurement. Okay? So this is on the whole New York Stock Exchange. So what we are starting to see is that there's more selling coming into the market than buying. That would imply that this move up right here, there was a ton of traders trying to pick a top, and each time they had their stop just a little bit lower, we got a strong little pop, and then a drop. Okay, so taking breakout trades during this time, you're only going for maybe $50 a pop, because you can't stay too long because it'll drop back down. Okay, so as the market continues to go higher, you're seeing it sweep and then drop back down. Okay, that just means they're taking out stops for the guys that are, or the traders that are shorting the market. Okay, so that was some of the information shared yesterday. As we scroll through, we had a few good trade setups yesterday, and going through that, a nice trade on bean oil, price came back down, showing the power of what it is we're teaching. Okay. There are different parts where we can take trades. Breakout trades do come with higher risk. And there's an awareness of things you need to know over on the left-hand side of the chart, like speed bumps, pockets of points, dead space, gaps. All of those play a part in whether that breakout trade is going to be reliable. Okay? Not every trade that we get into makes money right away. By using the leg base group of candles, okay, we can have a place for our protective stop loss, okay, and then participate in the breakout. Breakout trades are elevated risk because often the stop is further away, okay, versus a supply and demand trade where price is already broken out and then come back down, our risk is lower, and we are at a level where banks and institutions have leftover orders. Okay? So I don't mind participating in the breakout trades as well as long as I have a good place for my protective stop loss and can manage my risk. Okay? Nice little trade on this. This was yesterday's. So the takeaway yesterday is the equity indexes had a narrow overnight range. There's that wording again. It was an inside day. Very key point. Okay? Inside days, gaps fill trade opportunities. They also give us a direction where the gap is so that we learn to get into trades in the direction of that gap fill. Pre-market trend was 1.3. When the trend is low, time to go. When the trend is high, time to buy. It was light volume in the open, causing high volatility. Okay? Futures were balanced. Yeah, there was really no trade set up on the equity indexes. Along with the inside day, it was best that we waited till later in the session to participate in the equity indexes. Today's activity. A lot of Fed speakers coming out today. Okay, we still have in the late afternoon, 1:30, 3 o'clock, and 6 p.m. Treasury markets sell-off has become the worst bond bear market of all time, according to the Bank of America. Some news. Okay. Treasury yield broke support as session opens. The yield has been directly inverse correlated to the equity indexes over the last 5 to 6 weeks, but stronger then. We had a small Globex session as pre-market starts. Most of Wall Street traders are returning to the floor today. Stocks are very light in volume. See, all of this as we go through it, is check, check, check. Once you document this behavior and visualize it, okay, you start to realize that there are key points that every trader looks at to assess the risk of going in and participating in the market. What we are doing is giving you those specific pieces, and in the next few weeks I will have a pre-market routine document, a new one, come out to help us test out these things. The most important thing you can do when somebody's giving you a piece of information like inside day, outside day, is to test it over a period of time. While testing it, you either believe in it or you don't. I cannot do anything with your belief system. Only you can change that. By proper documentation of these pieces of information I'm sharing with you, you can then weigh out, well, man, that one happened, out of the last 10 days when we opened up inside the prior day's trading range. Breakout trades were often stopped out and I lost money. But the zone entries paid out pretty well. By assessing the Globex range over the last 10 days, okay, or 100 days, whatever your study will be, okay, we were able to establish what is a narrow range, okay, and what is a normal range, and what is a wide range, by using some pieces of information, collecting it, and then refining that plan, because each one of those narrow or mid or wide range, they trigger a strategy. As we just exploited here, the narrow range on these have led to some very nice trends. How would you like to know when the market is supposed to be trending today versus chopping sideways? That could save us a whole lot of time, couldn't it? Okay? Often the trending sessions are more in play when we have a narrow Globex range or small Globex range compared to the daily ATR, okay? And we documented some of that information here. Globex range versus daily ATR, small, 0 to 40% of the daily ATR. Average, 40 to 70%. Wide, 70 to 100%. These all led to me understanding whether it was sunny outside, overcast, or pouring buckets of rain, okay? No difference in what we do when we look out the window to assess the environment. Do I wear a short sleeve or a long sleeve today? Do I take a coat with me, an umbrella, or do I need boots and a winter jacket? Okay. All of these things are helping us assess market conditions. Okay. I'm not seeing a lot of questions. You guys are just letting me ramble on here. So throughout the trade session, okay, we had a few trades trigger, and I did get stopped out of a couple of trades. Okay. This morning we had an open range breakout trade, two of them actually, on the crude oil. Okay, that netted out a small profit. Didn't quite follow through. Okay. Another a trade on copper. We had, and yeah, this was a more reflection of the copper trade as it came out. Notice the picture. Okay. Notice the resistance, buy territory, breakout trade, supply and demand trade.
Order filled.
And our opposing zone. All right, what did we get into? We are on the NQ. Okay. Coming back in and placing my protective stop loss, 15,367 or 387. And a little bit higher than that. So it looks like I'm risking about $103 on the 2 micro trip that we took, okay? So price came into our prep screen zone, trade was set, okay? What we need now to support that move down would be the stocks over here. Tesla looks good, okay, helping out. Apple, nice red candle. Okay, so the stocks are showing a little bit of weakness after this move up. Anytime a trade triggers, make sure you look down and find out what time it is. Okay? Very important to know the time when trades trigger in a supply zone or a demand zone. As you'll see, between 8 a.m. and 11 a.m. Eastern, most often, the zones being entered into happen around the quarter hour. Now, why was I even thinking about going short in this area? Well, back to some of our internals. The trend was low. It's been low. It was a 15-minute chart. The trend precedes the market by about 15 to 20 minutes. Okay? So with the trend being low, it was time to go. All I needed was a supply zone in order to take a trade, going short based on this information. There were more sell tickets and more selling going into this up move than buying, okay? Our tick is now getting a little more bearish, and it's back to the neutral area. Again, we'll look for the sellers to come in. Our advancing issues over declining issues are in the upper range, where we often see the market change direction as well. Time of day, it's a little bit early for that trade to trigger, but price did enter into that zone about the right time, okay? So systematically, using what information we have in the pre-market, okay, we were able to quickly do several checks. I wasn't chasing the S&P or Dow or Russell to get into a trade. The only one it set up right now was the NASDAQ. Russell still needs to go higher, 1806, 1811, that's where we have our zone. Take the numbers down and go verify the picture over on the left-hand side of the chart by adjusting price up or down. Realizing that the Russell still needs to go higher to get into that zone, that puts my NASDAQ trade at a little bit of risk. The Dow, okay, let's come out here. We have not built that fresh accumulation of orders yet, okay, even on a 1 minute. out to a 20-minute chart, the Dow is in a prep screen zone, okay? It's in that range where we should be looking for some sellers. That's helpful for the move down on the NQ. The S&P, we are not in a zone. So for the S&P as well, it needs to build a fresh accumulation of orders before we start seeing an opportunity to take a trade short, okay? Now, fresh accumulation of orders for a sell is going to have 3 to 4 touches, or 3 touches minimum, of a support area. As I put my line across these areas, I find 2 there, 1, 2. So at each one of these levels down here, as price drops, we need to see it bounce off of that and then continue, okay? 2 points do not make a qualified support or resistance area. 3 touches minimum. Until I have the 3 touches, okay, then we want to still be thinking that the move is to the upside, okay? Now, the information I just collected right there on the S&P, the Dow, and the Russell, whereas they still look like they could move up, okay, is going to put some pressure on my NASDAQ trade. Am I prepared to take the loss of $100 on this trade by leaving my stop in play? If you're not, get out of the trade now and wait till you are ready, okay? Watching the stocks, well, the stocks have got another uptick. They are not in a downtrend, okay, so the risk is elevated getting into the trade. What I'm talking about right now is how do we assess risk in the market? How do we use pieces of information on the chart and outside the chart to say, hey, you know, I'm on the wrong side of the fence here? Well, 3 out of the 4 equity indexes, okay, we're not yet in a place to take a trade short. The stocks, even on a small time frame, are not in a downtrend, making lower highs and lower lows. I'm on the wrong side of the fence. Daily chart, we just broke above the 50 simple moving average. That's still bullish. I'm on the wrong side of the fence for a short trade. The tick Q, okay, we are seeing that there's more upticks than downticks, and it's been staying on the positive side of things. Also alerted me I'm on the wrong side of the fence. So we take information outside the price chart. We're not only watching our P&L, watching the stocks that make up this index, and much of that information is saying, hey, you're on the wrong side of the fence. So what do you do at this point? Just watch, wait, hope that it's going to take you out of the trade? I don't have to wait for this to go against me $100. I can wait and look at the time of day. We're 2 minutes away from the bottom of the hour. Okay, I'll wait 2 more minutes. Bottom of the hour, we may get a price drop. But since everything is not where it should be, if I can get out at break even, should I do it? Or do I want to stand my ground and try to prove myself right? Are you one of those traders that is a fear of missing out? Okay. Look, we got overwhelming evidence that I'm on the wrong side of this trade. Even though I had a prep screen zone, great location, everything qualifies. Futures are a derivative instrument, so they always follow something, they don't lead. So I need to see what they're leading. Well, the Qs leads the NQ, okay? The stocks, okay, oops, that's on the NQ, okay? But you could have the QQQ up here and see where it's at. The stocks will move first. Exchange traded fund moves second. and then the futures. What are my stocks telling me right now? Go short? Are they bearish? Are they bullish? Okay, we just passed, we're right at the bottom of the hour. As I'm monitoring this, I'm hoping now that I'll get a red candle, but it doesn't look like it's happening right away, does it? See, when we're making trades, we're using information outside the price chart as well as information on the price chart. We're using time. Once we start documenting the time of day, when we often see markets move. I mean, Chris Marcone is really great for watching the time of day. He likes that 1 o'clock area, okay? He likes at 10 o'clock. I mean, these are places that intersect with a supply zone or demand zone, becomes a trade opportunity, okay? Now, the longer I sit in here hoping, the more risk I am incurring and a potential bigger loss. Yes, right now my loss is at $100, okay? But I'm on the wrong side of the fence on much of this. So, being on the wrong side of the fence, I'm going to close this trade. I waited for my information to prove that I would have a successful trade, and it's not following through, okay? So I need to take less of a risk, okay? And I don't have to panic in or panic out. I just have to assess some information on my price chart, okay? So I'm gonna close that one.
Order filled.
Okay. And step out of the trade. I took a small loss on that, okay? Are you guys finding this useful? Helpful? Okay. All right, so let's continue. We had another breakout trade. These were the ones on the NASDAQ we took and S&P. Expect a long-running trend during the regular session. So that Globex range here was narrow or small, okay? It was less than 40% of that daily ATR, okay? Now, I didn't know if it was going to trend up or if it was going to trend down. If it trended down, then I had that pocket of points that was below it to give us a nice, fast momentum move through that area. Since it broke to the Globex high, we broke above a resistance, and we were in a pocket of points. Prices then moved up, and currently on the NASDAQ, we're right at this area, about 15,360. Yeah, we're inside that zone, okay? There still may be an opportunity for me to get into this trade, but I do need some information to change outside the price chart. The next time I can look at that opportunity would be in about at the top next quarter hour or the top or bottom of the hour to participate. See, every time we get into a trade, we're looking to verify that information. Here again, this is on the S&P, narrow Globex range compared to the daily ATR, and price started going through some of the zones. Now, that longer running trend scenario where we have the narrow Globex range, if it's trending up, maybe our supply zones are not the best place to look for an opportunity to take a trade short. We would need to use the information outside the price chart to help us make some of these decisions, okay? But on the S&P, I use these other areas as potential targets for profit, but not a place to take a trade short because of that longer running trend. Well, the NASDAQ, I chose to participate in that because of the longer running trend, okay? See, we had move from low to high here, okay, that measured move, and it was getting close or was right at the measured move. Now, we have impulse, correction, okay? We had impulse, we had correction. So now that price has moved back up there, what should our expectations be? Another impulse or a correction move? What time of day would you expect a correction or sideways trading activity in the regular session? After we just had a nice impulse, looking for correction, and possible another impulse, okay? Miss Chris, you just tell me when you need me to slow down or repeat something, I'll do my best, okay? All right, so let's continue. Some nice little setups. I'm only using a couple of micros. In the S&P, I use 1 micro, and on the NASDAQ, we use 2 during our session, okay? One of the big takeaways that for the session here was understanding that you can cover your monthly tuition with 1 or 2 trades using some micros, okay? One of your first goals should be, can I cover my monthly charge, okay? Can I do it in 1 trade? Can I do it in 2 trades? Do I need 4 trades to do it? Okay. Here with this, we covered this little trade here. We did it, we got $85 on the table. Well, that's half of my monthly payment. Okay. With the NQ, we had a much bigger move. It was like $250, so it covered the whole thing. All right. Takeaways. Key takeaways for today's session. Dollar was in a downtrend, so was the bond yield, 10-year yield, okay? Making lower highs, lower lows. Equities are reversely correlated to the equity indexes in these market conditions. The Globex range was small. Expect long-running trends during the regular session. The pre-market trend was low. When the trend is low, it's time to go. When the trend is high, time to buy. It was light volume. So we shied away from taking aggressive trades on the equity indexes because of the lighter volume, and with lighter volume comes bigger volatility and bigger stop loss, okay? Futures were balanced relative to the cash. So there wasn't a whole lot to expect as far as momentum trades. We'll bring into brought in the BKX, the trend, VIX, advancing issues over declining issues, and the 1-day volatility index, 1-day VIX. That narrow Globex range is one of the big key takeaways for this today. Okay? With the narrow Globex range, we now have seen this happen 3 days in a row. Okay, 3 examples, and I would say you would probably need about 50 before you start trusting it, okay? But over the last several days, the narrow, small, overnight range led to some bigger running, trending trades, okay? That is huge. Understanding the market conditions for the session can be really helpful and manage your risk at a much more elevated level. Now, I chose to get out of some of my trades earlier today, okay? Since I got out, I have not had the opportunity to get back in. If I'm looking for a demand zone, I need to look down, find my 3 touches of resistance, Find a buy territory. This is a dead space because I have 3 touches of resistance, 3 touches of support. Okay? So as I continue to go lower to find a qualified zone, another dead space. My first qualified zone would be down in this lower range, okay, 4270. That's pretty far away. In order to get into that trade going short, I would need to see that we're building a fresh accumulation of sell orders, okay? Now, our first indication that some sell orders are coming in, and I'm noticing it started around 12, is I now have an area over here where I have 3 touches of support. So let's start to visualize the right side of the chart at this point. The visualization process makes it less of a surprise when you should be ready to take the trade. We're gathering information right now. I am not taking a trade, but I have found an area that has been touched 3 times, which is one of the key odds enhancers to see where buyers kept pushing price up. Okay, and so far the buyers are still in control on this. Now, once price breaks that level of buyers, then I would have a sell territory. I'm just going to highlight this for conversation. Okay. Now, this is where I have potential more sell tickets than buy tickets. Okay. Down here is where I have buy tickets are exceeding the sell tickets. Okay. So the volume is, wow, it's not too bad, but it's not heavy for this time of day. I'm going to drop this down to 1,000 tick chart so I can walk you through this. Okay. Sorry, just making sure I'm connected. There we go. All right. Step 1, we found support. Support qualified with minimum 3 touches. Okay. Minimum 3. Got my potential buy territory. Drawing out the structure using the pivot of the support or resistance. And so far we're making a lower high than the prior high. So I know already that my zone is going to be located right around this area here. Okay? Stop loss, 4,016, okay? Breakout trade entry. Now, no, this is why Mastering the Charts Part 2 is coming into play, okay? Notice below this breakout area, we got this little mess right here, okay? This is the area that we're referencing as that speed bump area. Remember, this is still in an uptrend. We have our 2 candle pattern down here for the Fibonacci for the zone. Okay, so we have to be aware of that. We also, on this magnification, we could say, well, wait a minute, we're the 3 touches here. Is it possible this turns into one of those flip trades, okay, where it flips around? It does have the characteristics of a topping pattern, okay? But it hasn't proved itself as far as the supply and demand trade. As a breakout trade, yeah, it's proved itself. but there's small profit margin potential. Okay? As we're waiting for this to develop, all we see is that price just bounced off, found some more sell tickets at this area. Doesn't mean anything else other than that there were just more buy tickets than sell tickets at that point. Until those buy tickets are taken out, the assumption is the trend must continue. Okay? So our TMI team put the takeaways together, and I think they did a fantastic job on this presentation today and yesterday as well. Great summary, team, and great job on the slide deck. See, they're assembling this the whole time that I'm doing the live trading room. So I think they're just doing an exceptional job, and I'm just really excited to be working with them. And some of you also have had some correspondence in upcoming announcements and asking the TMI team, and you've gotten very quick responses, and I like that. Okay, so let's do a quick review and wrap this session up. Okay, so mastering the charts review. And I've been doing this pretty much the whole time. 5-step process. Okay, might need to change the numbers on that one though. Step 1, find support or resistance, minimum 3 touches. Step 2, get to draw out the buy territories and the sell territories. Use the boxes. Structures. In your first 100 picture perfect past trade setups, draw the structures. Okay. Tomorrow I'll do a small section on why the structures are so important in the buy territories and sell territories. The way that you train your eyes, just as we used a small Globex range to get a long running trend, well, how do we use the structures to avoid the speed bumps? Which structures give us the long running trend? Which structures do not? And they're quick reversals. Okay? That's why it's so important to draw those structures out. The structures also lead to where the area to then adjust the time frame down or up to find the leg base group of candles. So, step number 1, find a support or resistance. We define support or resistance by minimum of 3 touches. Minimum. Okay? Step 2, find the sell territories and buy territories. Buy territories will be below resistance, sell territories above support. All zones should be in a sell territory or buy territory. An example here, let's just call this a price rallied up, based, and rallied. That rally-based rally setup, the zone is in the wrong location, therefore has less probability of success. Okay? Step 1, find the support or resistance area. Step 2, show the buy and sell territories. In your first 100 picture perfect past trade setups, go and document this, label it, annotate, take notes. Okay? After about 50 of them, you'll see that your eyes are directly trained to see these on the price chart. As I mentioned, the importance of the structure. The structure is using the buy territory with resistance, sell territory, and support, getting those pivotal points throughout that range to help us look for that long running trade. Notice in this one we have a pivot 1 and 2 on the left, 3 and 4 on the right, and low pivot in the middle. The result of that structure and that picture is we got a longer running trend. So where price hits resistance versus where the low pivot point is in a buy territory, high pivot point in a sell territory, are important attributes to knowing when to stay in a trade longer for the breakout portion of it. Okay? Circle the area by understanding if we make a higher low before the breakout or a lower high before the breakout, often the zones are in the upper or lower 2/3. Okay? Now, if I'm making higher low in a buy territory, the leg base group of candles is located closer to the breakout point. Lower high, closer to the breakout point. Okay? Circle the area. And step 5, adjust the time frame up or down to get the leg base group of candles. The area you find the leg base group of candles is important. It exposes you to the risk that is necessary in order to participate in that trade. The area between your entry and stop line, okay, is the risk on a trade. Understanding that risk ahead of time can say, well, I can't trade that product because the zones are too big. It's okay, you're just not ready for it now. Or I can trade it, the zone is big, let me properly size my position so that I don't go outside my trade plan's dollar risk per trade. Okay? Yes, in a trade plan, you should have a dollar maximum risk. Even if it's $50, okay? At least getting that answer ahead of time, okay, where your zone is, you can say, well, I can't trade that one because even using 1 micro, my risk is $65 and I only allocated $50. Perfect. Your trade plan must be specific and fit to what your risk management is. Okay, if you're willing to risk $100, $200, 500 or 1,000 on a trade, that's your trading plan. Okay? By collecting this information and identifying where the zone is at, we can then get an idea of whether we should be participating. Oh, pardon me. Where we should be participating in a trade. Okay? And then step number 6, also equally important, because we lost some of our data, is that step number 6 is to take your picture perfect past trade setup, and I'm going to do this with you right now. I'm going to take this. On the other chart, I have my snipping tool. Okay, grab that snipping tool, and I just highlight the area that I want to post. Okay. Now, in the Discord room, we have a section called Picture Perfect Past Trades. Okay. Thanks for everybody that's contributing in here, because your little lessons and the way that you discover things about yourself is first by holding yourself out to the public, putting your research out there. You make yourself a little more accountable and you start to see that you really accelerate, okay? Your learning curve accelerates. So I'm going to take that picture that I just used my snipping tool, and I'm going to right click and paste into the picture perfect past trade setups. And then hit enter. Okay? As it loads up here, okay, and you can all see it in your Discord room, we have a picture of a picture perfect past trade setup and all the steps to find a picture perfect past trade setup. Okay? The picture that I just illustrated here, we have missed the breakout portion of these trades, but the supply and demand zones are still intact. Okay? They're ready to make trades. Of course, this is an older example. Please get comfortable posting in the Discord room for yourself. The more that you participate, the faster your learning curve, the more things you will accelerate at because you're doing that. Okay? All right. So we see that buyers keep coming in around this area. Our sell territory is still being established. Okay? A sell territory, in the process of doing this, okay, you may want to keep that a neutral color until price breaks that, and then it becomes a sell territory. Okay? On the outside, the one-day volatility index above the moving average is a little more bearish. Okay? Bank index below the moving average, a little more bearish. Okay? This is the right scenario. When one is, when they're both above or both below, that's when we see a lot of choppy environment, sideways environment. Okay? All right. 44.12 half, we're going to look to take the breakout for a short trade into 44.10. Only a couple of points right here. Okay, 44.12 half, sell stop market. Okay, the importance of having a leg-based group of candles is you have a reference point to where you can place a protective stop loss. Now, I realize taking this stop loss, okay, entering here, stop loss here, I'm not looking for a big profit. The risk is elevated, isn't it? Okay. The moving averages on these, I think, are 8 simple moving average. 8-period simple moving average. You can use any one, okay? Just study it for yourself. Always remember that you will create your own trading plan. We had one of my past students, or one of our students, came in and was demonstrating some of the things that he uses in his trade assessment, when to go long, when to go short, when to find supply, when to find demand. He took some of the basic concepts that we're sharing in here and he made it his own. We will all see the picture a little differently, okay? There's no one right way, there's no one wrong way, it's your way. It's your money, your capital, your risk, okay? So take the bits and pieces, nuggets that you get from each and every person out there and start to assemble your own trading plan. Now, I need to be very rigid in my trading plan and very detailed so that it gives you all a great foundation that trading plans work. And having a trading plan is one of the most important parts we can do in our trading and our learning and trading education, okay? Start off with something simple. What is the maximum risk that you will have on a trade? Write that number down. We have a variety of different products out there where you can properly size your position ahead of time, okay? This area over here is our speed bump. Risk is elevated to take this breakout trade to the downside. But if I'm willing to accept that risk and accept my stop loss, potential profit, fantastic. See, when we walk in, if we come up to an intersection, okay, and I've used this analogy when I worked in New York for a while, is you could always tell the difference between a tourist and a New Yorker just by looking at the intersections and how they cross the intersection. Somebody that's been living in New York for a long period of time just barely looks left and right, but just blasts right through the intersection, okay? they're aware, they're familiar with that or that environment. But for us tourists that were over there, we stopped at every intersection, waited for the light to say walk, look both ways, and then we were still scared to cross the street. Okay? So the difference is your education, experience level. When will you take that additional risk, knowing that there's a speed bump down here? Okay? Knowing that the trend is up. We have not made a downtrend yet. Okay? The BKX, Bank Index, is above the moving average. VIX is above. Okay? So we're experiencing that choppy condition. Up. And Chris pointed out he's been very much documenting what happens around 1 p.m. Eastern time, where we see the market change direction. So we got a trade set up. This one is short-lived. There's not a lot of profit potential in this at the moment until we build a bigger accumulation of sell orders. Great session today. Look forward to seeing you all tomorrow. And I will be over in the Discord room here shortly. And I wish everybody a successful rest of the day. And we can trade together over in the active income channel. All you have to do is click on that. You have mic privileges, voice privileges, and you can share your screen and stuff. I appreciate everybody here. And just, you guys need help, please reach out. You've seen the reliability on Team TMI or TMI Team, and we've got a great group of folks supporting us. There you go. All right, and we get a nice little trade as we leave. Have a wonderful day, everybody. Thank you. Bye-bye.